morning, everyone. It's Tuesday, June 9th. I'm Marv Eisen of Timeless Dollar. And beginning today, looking at the morning's economic calendar, we see several announcements, none of which are going to be moving the market. So let's move over to the morning news. Flags are in the green, but it's not an indication that the market is going to go up today. Oil is up. U.S. Treasury is still up over 3%. Haven't seen that since 2018 and 19. So interest rates are definitely heading higher, which is not a great thing for stocks. But in the stock market, there has been news of a looming recession. We have to see about that. Stocks have been trading actually the S&P has been trading in a relatively narrow range. Let me go over to my E-mini chart. This is yesterday. I teach a course in E-mini trading called Trading Mastery for Financial Freedom, and I use as many tools as I have available to help me trade. And two of those tools, that I talk about them all the time, is the previous day's close, which I always put the line on my chart for the next day, and the calculated trading zone based on Taylor's trading technique. And these are tools, and other tools that I teach in my course are the various types of trades to look for and how to watch for them, and the tools that you use to watch for them. For instance, stochastics. But I want to talk about one of the trades that I mention frequently, and that's the gap trade, because gap trade closes 70% of the time. So that's about as close to a sure thing that you're going to find in trading E-minis. So let me talk about a sure thing. In my course, I talk about the years ago when I was a young man, and I had an Uncle Phil, and I was in business with my family, and Uncle Phil was a principal of the company, and we made apparel ornaments, buttons, buckles, studs, nail heads, stuff like that. And one of the things that my Uncle Phil, who was an excellent businessman, one of the things that he always said was, business should be a sure thing. So let me talk about the gap trade, and that's 70%. 70% is 70%. It's not a sure thing, right? So I want to use 2 days of trading, yesterday and the day before, as an example of a sure thing gap trade, which of course, it's not a sure thing. But the gap trade yesterday, June 8th, offered a 25-point gain. And of course, prices, as you can see, they did fill the gap shortly after the morning opened. And prices moved up. Look at the way prices moved. They moved up fairly rapidly and consistently to filling the gap. Okay? Sure thing? Almost, but not quite. But the trade worked for up to 25 points. I think 30, maybe a little more. But look at the day before, June 7th. Now, on June 7th, there was also an opportunity for a gap trade, and prices opened down here at 40.80, and the gap was up here at 41.20. So a 40-point gap opportunity. But look how, and the gap did fill, but look how it got there. The prices first bumped their head against my calculated support, which of course acted as resistance. Remember, these lines are calculations, and you have to be able to use them as tools, not definite stuff, because there's nothing definite in the market. But let me now go back to my story about my Uncle Phil, and I talk about him in my course, Trading Mastery for Financial Freedom. One of the things that we made in our company back then, and I'm talking back in the 70s, I was a young man, was this. I don't know if you can see it, was this. You see this? This is what's called an Army buckle with a web belt. Okay, it's standard in the Army uniform, U.S. Army uniform, and it was also an apparel ornament. I mean, anyone could make it if they had the means to do so, and we did. And so this was a product that was starting to become popular as a consumer apparel item, and customers started asking us to tool up and sell this to them. We sold to people who made garments. We didn't make garments, we made the hardware. So And this required a considerable amount of tooling. There are 1, 2, 3, 4, 4 components to this item, and it required tooling, stamping, roll forming, head swedging, things like that. And I'm talking to my Uncle Phil. I said, gee, this is a great product. People are asking us to make it. We ought to make it. And he said, nope, we're not going to make it. Maybe we'll make it, but we're not going to make it. I said, well, why not? They're asking us. Customers are asking us. They tell us that they're going to buy it. He says, no, we are going to wait until our competitor makes it and see how he does. If he does and he makes it and it's popular and it takes off, we can make it. We'll make it. But until then, it's just an opportunity. It's not a sure thing, and business should be a sure thing. And those were the words of wisdom from my Uncle Phil. Business should be a sure thing. Now, can business be a sure thing? Of course not. Is trading a sure thing? Of course not. So let me talk about the gap trade and the 70% opportunity that it offers. Here on June 8th, yesterday, the prices moved up fairly consistently and closed the gap quickly. So those who made the call to get on the trade here at, let's say, 41.34 and wrote it up to 41.60, call it a 25-point gain in a pretty fast move, okay? But now let's go over to the day before, June 7th. Prices opened up here at 40.80, and they hesitated, bumped their head against my calculated support line, which was resistance, and stopped, and then backed off. As you can see, they backed off. But if you got on this trade here at 40.80 and saw prices backing off, you could assume maybe the gap is not actually going to fill. So was it a sure thing? Well, ultimately, the gap did fill for 40 points, but over here, for those who took the trade, got on at 40.80 and held on at 4100 or thereabouts, and had some misgivings about the trade working out. Well, let's talk about this. Was 20 points here. That was a sure thing. Those traders had 20 points under their belt, 20-point profit. So should they wait for the gap to fill, hoping that it's going to be a sure thing? Well, of course it's not a sure thing. It was anyone's guess here that this gap would fill. It was a high likelihood, relatively high likelihood, but the sure thing were the profits that were already locked up. So in terms of the gap trade, trade the sure thing. If you are getting on a gap trade and the prices, or what you feel is going to be a gap trade, and the prices sort of hesitate on the way there, close the trade, take your profit, be happy. That was the sure thing. Always trade the sure thing. Don't go for a gamble if you don't have to. If you have a sure thing locked up, but you think you're going to be able to eke out some more points at the risk of losing your sure points, don't do it. So listen to my Uncle Phil, and if you really want to be able to be a better trader, take my course at timelessdollar.com. Go to my site, click the link. You'll see it on my site. Let me get to my site here. And you can get a link to the course, E-mini courses, E-mini trading course, log in, register. Do that. So that's my video for today. Always play the sure thing if you can. Be safe, trade with lots of patience. Thanks for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar.